Johnson & Johnson shares are higher this morning after the company reported earnings and revenue that beat estimates, and it raised guidance for the full year. That stock up by close to 1% right now. Joining us to talk about it is Joe Wolk. He is Johnson & Johnson's Executive Vice President and Chief Financial Officer. And, Joe, it's great to see you this morning.
Great to be here, Becky. Thanks for having me and your interest in Johnson & Johnson. It's a pleasure to be here on such a good earnings day for really our colleagues across the globe who wake up every morning trying to elevate the standard of care. You know, we came into 2025, and I think we were looking at a lot of macro uncertainty. At Johnson & Johnson, our second largest product, which is $11 billion in revenue, was losing patent exclusivity in the U.S. To give you an idea, Stelara, yeah. Right. It's a treatment for psoriasis and inflammatory bowel disease. That product declined $1.2 billion from second quarter last year to second quarter this year. Yet the pharmaceutical portfolio, the rest of it, had 15.5% growth to record their highest ever revenue in the history of the company, over $15 billion for the first time. We saw improving results for Medtech from first quarter. I'm encouraged for really the balance of the year as we raised our guidance substantially. But what's happened clinically in our pipeline really gives me a lot of enthusiasm and bullishness for what's going to happen for the balance of this decade. 25 is shaped up to be better than what we thought. 26 will be better than 25, 27 will be better than 26.
And that's not because of the macro. That's in spite of what's happening in the macro. You just have some products that are, I was just looking at it, the innovative medicine, you had 13 brands that were up double digits.
13 brands that were up double digits. So oncology, if you look at multiple myeloma, 80% of patients who have multiple myeloma are having use of a Johnson & Johnson product. We just had some great data on Carvykti, which is a T-cell CAR T therapy. The overall median survival is now 60.7 months, better than 5 years.
Right? I was looking through that.
Yeah, it's one treatment. So you can't say cure in the label, but the experts are saying functional cure. Truly amazing stuff, curing cancer.
Sooner.
Yeah. And then what's in the pipeline is amazing.
What is in the pipeline? What are you thinking is going to be?
I mean, I can go across just about every franchise in medtech and pharmaceutical. Let me start with Tremfya. It's on the market today for psoriasis. It's about a $4 billion product already. That's going to be kind of the successor to Stelara. We just received indications for ulcerative colitis and Crohn's disease, inflammatory bowel disease. To give you an idea, Stelara, 70% of the prescriptions were for IBD. We see this being a $10 billion product, which analysts are underestimating at this point. There's a great product for bladder cancer, and it's really quintessential as to how unique Johnson & Johnson is. So we relied on our surgical specialist in the Medtech unit to combine our expertise for drug delivery systems for bladder cancer. The current treatments are debilitating. 600,000 people a year are diagnosed with bladder cancer that are new patients, 400,000 relapse. So 1 million patients a year. It's usually resulting in patients losing their bladder. Our product is a intravesical drug delivery system, sits in the bladder. It's off the shelf, doesn't require refrigeration. It's about a 3-minute insertion, about 3 minutes to take it out. No anesthesia. Its complete response rate is 20 points higher than the next competitor, up over 80%. So these are significant life-saving, life-altering drugs that improve the standard of care for patients as well as what physicians have to administer.
All right, let's talk about the macro, things you have a little less control over.
Sure.
A lot of questions coming, and let's start with the tariffs that the president is talking about of 200% on pharmaceuticals that are imported to the United States. How does that impact you? There may be a year and a half that he gives grace period to try and catch up with this, but where would Johnson & Johnson be hit today if those were put in place? Yeah,
so I think it's important. You know, we'll stand by the statements that I've said on this show, that Joaquin, our CEO, has said, that we think good tax policy actually translates into bringing manufacturing jobs back to the U.S. And we saw evidence of that with the 2017 TCJA. If you look at biopharma manufacturing since 2016, so right before the passage of the last tax act, that has increased 22.1%. All other industries in terms of manufacturing has only increased 3.8%. Wow. There's more biopharm facilities, about 1,100 in 2017. Today there's 1,500. We were so pleased to announce, and it was really based on the tax policy that we trust would go through, to commit to $55 billion of investment here in the U.S. To give you an idea, that will enable Johnson & Johnson to supply any of the medicines it manufactures to U.S. citizens out of U.S. facilities.
By when? $55 billion?
By the end of that investment period, certainly by the end of the decade. So that was over the next 4 years. So, listen, I think to be fair, a year and a half is very short based on how long it takes to put up a biopharma manufacturing facility. But we're pleased with the engagement with the administration. They're listening. It's not just here's a tariff tomorrow that's going to be 200%. There's an understanding that of our business that it takes some time to build these facilities. We certainly want high-quality product that's reliable that patients are going to have to use.
Joe, I wouldn't like to try to run a pharmaceutical company. You can't jump on every trend.
Can't.
Obviously. And you have a 3.5%, 3.4% yield, but no one's made any money recently for 3 years, while you get into weight loss or something. I think I have a J&J Lilly 3-year chart. I didn't even look at it. I just asked to see what it looks like and what can happen if you happen to, what is that, like striking it rich when something like that happens, 132% minus. But then I also asked for a Pfizer. Then you put all your eggs in one basket on some vaccine, and then you turn into Pfizer, which probably makes J&J look quite a bit better than Pfizer. So that just shows you that it really does matter what you decide to focus. And no one can know. You can't.
Yeah, I think we're very much on the right track, Joe. So if you think about some of the things that maybe got in our way, we had the Stelara loss of exclusivity.
Right.
It's rare that investors are going to jump in front of an $11 billion product that's going to have generic competition. That's becoming a rearview mirror event at this point in time. Right? For our portfolio to grow, we are, literally, probably figuratively curing cancer in many cases, getting into new areas. On our Medtech business, a lot of analysts have us penciled in for 3rd or 4th place in electrophysiology, where we've been the market leaders. We had flat growth in the first quarter, 10% this quarter. We've got a path and a plan to get back and recapture not 3rd or 4th place, but 1st or a very strong 2nd place.
Keytruda is not you, but that's going to be tough.
That will be tough. Yeah, but that's the beauty, I think, of Johnson & Johnson. We have 26, soon to be 27, platforms or products that generate more than $1 billion in revenue, and many of them are multi-billion-dollar revenues.
The one thing I will say is 3 years ago, you still included the consumer products group.
That is correct.
Kenvue was spun off in 2023, and it has not gone well. We just heard news this week about the CEO stepping down, a new interim CEO that's taking place, that's coming in and taking over with this. Does it make you convinced that spinning off was the right thing, the spinoff was the right thing to do?
Yeah, listen, I think, I can't speculate. It'd be an uninformed opinion. We sold our retained stake last summer, so we really haven't been involved in that business to any degree. There's great brands there, though. If you think Aveena, Neutrogena, Listerine, Tylenol, Motrin, I think that business will certainly find its way. It's tough to start up a company, and that's essentially what they've done. But that was definitely the right decision for us. If you look at the growth and the focus that we now have in pharmaceuticals and medtech, I think it's very difficult to argue with the results that we have. And those businesses separated. 10 years ago, 9 out of 10 dentists or 9 out of 10 dermatologists mattered in advertising. Now it's about Jennifer Aniston or Kim Kardashian.
Or whatever influencer.
And so it's a very different business model with different capital intensity.
The weak dollar has been a big boon for you all, too. How much of the raised guidance that you're giving is because the dollar's weaker? Yeah,
so if you look at the top line guidance, I would say we're up about $2 billion for the full year. I'd put half of that in the category of the weaker dollar, the currency dynamics, and then half due to the operational performance and the outlook that we see ahead.
And the operational performance, what's some guidance on what you can give in terms of the margins that you're expecting margin improvement?
So we're committing, we're reaffirming our commitment from January. That's a 300 basis point improvement on operating margin. That includes $200 million of tariff costs in this year. Okay. So, I know there's some concern about maybe there's more tariffs to come. Just based on how the accounting works, I don't see an impact in 2025 because it gets hung up on the balance sheet and inventory.